What is a 401k versus a Roth 401k? So there's a big distinct difference between a 401k and a Roth 401k. So both accounts are employer-sponsored retirement accounts, meaning you cannot have a 401k unless it is through your employer. But one of the critical differences between the two is how they are taxed or treated from a tax perspective. So a traditional 401k, or what's going to be shown on your thing is just a 401k, those are pre-tax. So what that means is that any of the money that goes into your 401k lowers your taxable income in the year that you are given it. So if you make $100,000, you contribute $20,000 to your 401k. On paper, you only have $80,000 of taxable income because that 401k contribution lowered your taxable income. So once that money is in the 401k, it can compound year over year until you reach retirement. And once you reach retirement, you withdraw that money and that becomes your paycheck, and it becomes taxable when you withdraw the money from your 401k in retirement. And there's one important difference between the 401k and Roth 401k. Two is a traditional 401k, you will be required to take out what's called a minimum distribution, which right now the age is 72. In the past, it's been 70 and a half or whatever, but at age 72, the IRS is going to require you to start taking money out of your 401k. Whether you want to or not, you're going to have to take it out, so you will lose control over your taxes later in life. A Roth 401k, however, is the exact opposite. A Roth 401k, all that money goes in post-tax, meaning you've already paid the taxes today, so you don't get a tax deduction today, which that kind of sucks, but that money goes into the Roth and then compounds year over year through retirement, and then as long as you meet a certain couple thresholds, you never have to pay tax on that money again. So it basically is just all tax-free. So you can take it out in retirement and never have to worry about the tax components of that. So we've basically tried to break this under different circumstances, but pretty much in every circumstance, a Roth 401k is going to save you more money long-term throughout your life and throughout your career than a traditional 401k. Traditional 401k, feels nice because you get the tax deduction today. The Roth, you can't see the benefits of it for a long time, but pretty much no matter how you slice it mathematically, a Roth 401k is going to make a lot more sense for most people out there just because of the amount of tax savings that you're doing. And if you're maxing out a 401k, so which for this year is about $20,500, you're no doubt if you're in your 20s, 30s, you're going to save millions of dollars in taxes over the course of your life, which is a lot of money. So when push comes to shove, make sure you're looking at Roth 401k. If your company doesn't offer a Roth 401k, a traditional 401k is also a wonderful option. But if you don't have a Roth 401k, you also may consider a Roth IRA, which is not tied to your company. A Roth IRA is similar taxation to a Roth 401k. You're limited on the amount that you can contribute into a Roth IRA, but it's a great alternative if your company doesn't offer a Roth 401k.